Welcome back to the KJ Methods YouTube channel. I'm trying to dedicate myself to get 1,000 of you guys licensed before the end of 2025. I'm not sure that we can do it, but if you like, subscribe, tell your friends about the KJ Method. We may just get there. What we're doing today is Valuation Test Part 2. If you're just joining us, make sure you go back and look at all of the other videos that we've done on different tests. At KJ Method, we are interested in making certain that you understand the material, not just regurgitate it. If you understand the material, you can answer any question. And before we move on, don't forget to click that link below if you want me to send you my free study guide that I have developed for you guys. Okay, without further ado, let's get started on Valuation Test Review number 2. Valuation tends to be a difficult topic for students. 11. The replacement cost approach would be most appropriate when valuing A. A public library. B. A 20-unit investor-owned apartment building. C. A single-family residence. Or D. A storage business with 40 units. What say you? Well, most likely here it's going to be the public library. Why is that? Because it is a unique type of property. And so unless there's a whole lot of libraries for sale, right, it's going to be difficult to find a comp. So when there's a unique property, most likely we're going to use the replacement cost approach. Under B and D, we could use replacement cost approach there. However, we also may be able to use the capitalization approach or even gross income multiplier approach because there's going to be some income relating to those properties. All right, so they're not as unique as the public library. Number 12, appraiser is valuing a one-family residential property with 3 bedrooms and 2 baths. The appraiser has located a comparable. It is 2 bedrooms and 3 baths and sold for $230,000. A bedroom is worth $4,000 and a bathroom is worth $5,000. How much would the subject sell for? Guys, this one is going to be a little confusing for some of you. But what I want you to understand is we're trying to get properties as close together as they can, right? So if there was a comparable that sold, we are trying to make it look like the subject so that we can get a price for the subject. And what we're saying here is that a bedroom is worth $4,000, bathroom is worth $5,000. Before I give you the answers, do you remember comp, better, subtract? Comp, inferior, add. And so what you do on these is you look at the comp only. Here, the comp has 2 bedrooms. And so the subject has 3 bedrooms. Is the comp better or inferior on bedrooms? It's inferior. So you're going to add that amount of money to the comp for a bedroom. So you're going to add $4,000. That's going to get you to $234,000. You with me so far? Okay, now let's go to the bathrooms. We're looking at the comp. Is the comp inferior or better on bathrooms? The comp has 3. The subject has 2. So it is better. When it's the comp is better, you're going to subtract that amount. Here, a bathroom is worth $5,000. So how much would the subject sell for? So we're going to add $4,000, get us to $234,000, and then we're going to subtract $5,000. All right, and so if we now do it that way and we look at it, boom, the answer becomes apparent. It is going to be $229,000. Make sure you go back over that again if you didn't get it. 13, market value of a property is determined by A, the actual selling price, B, the most probable selling price between neighbors, C, the price after applying an assessment rate. D, the most probable selling price in an arm's length transaction. Yes, it's going to be D. Why do we say that? Because it's the most probable selling price, but it has to be an arm's length transaction, meaning you just put it on the market. You don't know the person buying the house. You just put it on the MLS. That's going to be the best market value. Why? Suppose it's your neighbor. You're like, oh, I'll give you a little deal. Suppose it's your sister. I'm going to give you a deal. No, we are going to look at the most probable selling price in a transaction where we just don't know the person. 14. In which situation would an appraisal most likely be required? A, a purchaser is obtaining financing to purchase a home. B, an insurance agent is insuring a residential property. C, a lawyer is settling an estate. And D, an investor is purchasing a 20-unit apartment building with cash. It says required, most likely be required, and that is going to be a purchaser obtaining financing to purchase a home. B, you get insurance all the time on your house. It's not required that you appraise it. A lawyer settling an estate, not required that it be appraised. And an investor buying cash, certainly not required. We said most likely required. Careful reading. 15, an example of the principle of substitution would be A, appraising two properties that are equal to one another. B, a theory that a comparable establishes the upper limit of prices in a certain neighborhood. C, two homeowners exchanging parcels with each other. Or D, the inability to sell a higher priced home in an area of lower priced home. Well, that is going to be the best example of the principle of substitution. We said this earlier. If you have your house for $300,000, every other house is $200,000. Which ones do you think are going to sell first? All of the 200, 200,000, 201, 202, until they eventually get to you at 300, which probably is going to be 10 years from now. 16, an appraiser is valuing a property with 5-bedroom, 3 baths. The comparable has 4 bedrooms, 4 baths. The appraiser will A, adjust the subject upward for bedrooms but downward for baths. B, adjust the comp upward for bedrooms and downward for baths. C, adjust the subject downward for bedrooms but upward for baths. D, adjust the comp downward for bedrooms and upwards for baths. See, I make sure to give you hard questions because if you can answer these hard questions, you know that you know the material. The very first thing you have to say to yourself is, we never touch the subject. We never touch the subject. We only look at the comp. And so anytime you see adjust the subject, A and C, those are both wrong. And now we're going to say, are they going to adjust upward or downward for bedrooms and baths? And the answer would be B. We're going to adjust that comp upward for bedrooms, right? And why? Because the comp is inferior. When it's inferior, it has 4 bedrooms. The subject has 5. It's inferior. When it's inferior, we do what? Add. CIA. Like the government. CIA. Comp inferior. Add. And so add means upward, right? So it's going to be B. 17, an appraiser is asked to appraise a 3-story commercial building. What is the first step in the appraisal process? A, identify the problem. B, go to the building. C, determine the number of appraisers necessary. D, set a fee. I hope you know this is easy peasy KJ low-hanging fruit. You got to identify the problem. Anytime you're given a problem, what do you got to do? Identify the problem. So that's pretty easy. 18, an appraisal is blank and a primary utilized to blank. All right, so we're going to fill in the blanks here. An appraisal is A, determination of value, and it is used to assure the bank that the property is worth the sales price. B, it's an opinion of value. and it's there to solve a problem or answer a question concerning value. C, it's an opinion of value, and it's there to assure the bank that the property is worth the sales price. And D, it is a determination of value, and it is there to solve a problem or answer a question concerning value. The very first thing that you have to understand is that an appraisal is an opinion. Different appraisers are going to have different opinions. So it is not a determination of value. So you can automatically get rid of A and D. But what it is an opinion of value. And it is there to solve a problem or answer concerning value. It is not C. It doesn't assure the bank. It doesn't assure the bank that it's worth the sales price. It is an opinion of value, and an appraisal could come out less than the sales price, right? It could come out more than the sales price. So we're not doing it based upon the sales price. We're doing it based upon the value of that property. 19, a lender explains to an appraiser that his assignment is contingent upon the appraiser coming up with a specific number. What should the appraiser do? A, accept the assignment if he believes that he can reach that number. B, accept the assignment but tell the lender that there's no guarantee that he can reach that number. Refuse to accept the assignment as it would violate the uniform standards of appraisal practice. D, refuse to accept the assignment and report the lender to the local police department. Well, it's generally not going to be local police department. These are civil matters, but you shouldn't accept the assignment. Taking an assignment based on, hey, you have to come up, it's contingent upon you coming up with this number, right? I can't accept that assignment. And for me to do so would violate the standards of appraisal practice. We cannot take assignments contingent upon finding a specific problem. 20. A homeowner wishes to install a huge swimming pool with a slide to the cost of $250,000. Her home is valued at $300,000 in a neighborhood of similar homes, and the swimming pool will raise her property taxes by $4,000 more than the other homes in the neighborhood. What two valuation principles would suggest this may not be a good idea? All right. A, regression and economic obsolescence. B, progression and economic obsolescence. C, regression and functional obsolescence. D, progression and functional obsolescence. Hopefully, you could get rid of functional obsolescence. We went over that. That is how the property functions. 5 bedrooms, 1 bath, old boiler system, right? Paneling in the house, right? As opposed to paint and so forth. Wallpaper would be functional. So let's get rid of C and D. So we know that this is economic obsolescence. How do I know that? Because she's not going to be able to sell this house for $550,000 because it's a neighborhood of less houses. Okay, so she's not going to be able to sell it. So that's economic obsolescence, because that means that the outside pressure, right, from the neighborhood being lower is putting pressure on the house. So I'm going to stick with economic obsolescence. Now here's another problem. How much is her house going to be versus all the rest of the houses? Those houses are going to do what to her value? Pull her value down. That is called regression. Regression and economic obsolescence. All right, that is it for test review number 2. How did you do on that one? Please, in the comments, let me know, are these helping you and how you are doing? Once again, don't forget to click the link below. If you want the study guide, invite people over to the KJ Method. Don't forget to like and subscribe to the channel. The next one will be Valuation Test Review Part 3. And make sure when you're listening and taking these tests that you are understanding the answers. Once you understand the answers, you can answer any question relating to that topic. I'm KJ. I will see you next time.
Jumpstart your real estate career with KJ Method. Pass the exam with flying colors, only with KJ Method.